Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions featuring the proprietary bull bear point and figure market breadth summary chart for November 4th, 2018. Market breadth. With this past week's market advance, our bull bear point and figure ratio at 0.76 rose from 0.21 last week. The total count of securities in bullish or bearish patterns decreased 11% to 2,967. The count of bearish stocks decreased 38%, while the count of stocks in bullish patterns increased 11%. The Pirls P&F market breadth summary chart shows us a market now 8 weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 17 points for the fifth advance in 21 weeks. At a negative 943.01 points, it continues below all 8 tops above plus 100 in the last 30 months, and it continues below all 4 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 4 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Nasdaq ended in distribution mode on higher average daily volume. Momentum. The CCI 20 daily now at a negative 18.85, up from a negative 128.84 last week. The CCI 20 daily, in a Woody's downtrend, has now risen to the plus or minus 50 range required for a valid zero-line reject short entry signal if the CCI 20 daily falls early next week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 130 weeks ago, while the daily CCI 20 began a Woody's downtrend 3 weeks ago. The CCI 20 weekly rose to a negative 178.75 from a negative 220.95 last week, 4 weeks below zero, and continuing below the plus or minus 50 range required for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: banks and brokers on top, oil, oil services, gold and silver, and some tech on the bottom. Bullish: oil, oil services, and gold and silver continue in the bottom 5. KBW Bank and brokers have entered the top 5. Disk drives has left the bottom 5. Bearish: REITs has left the top 5. Focus this week from economica.blogspot.com. What happens when you stomp the gas and the brake simultaneously? Pro-cyclical Trump Congress versus counter-cyclical Fed. The following are some key points and charts. Many Americans believe in a simple idea called fiscal conservatism. Low taxation coupled with low government spending and low or reduced government debt. However, the nation's leadership, executive and legislative branches, have fallen in love with the idea of spending tax money you and I haven't made yet. The current Congress and President have embraced a policy that should be termed as fiscal populism. If you notice in the circled area on the far right of the chart, you will see the large declines in corporate tax revenue and also the zero growth in personal tax revenue. However, the kicker is the parallel surge in federal government spending, driving federal debt above vertical. Until now, increased federal spending coupled with lower tax revenue collected act as an economic stimulant, typically in sync with interest rate cuts. However, the President and Congress are undertaking large spending increases and reducing taxation to gas the economy, typically in line with the onset of an economic crisis. While the Federal Reserve is moving in a pro-cyclical direction, raising rates, plus selling off $50 billion a month from its balance sheet, in an attempt to stomp the brakes on the economy. These two parties are clearly not on the same page, and likely to only get further apart. The Fed has committed to continued rate hikes and balance sheet reduction, while the President, Congress continue to increase federal expenditures and are even discussing additional tax cuts, particularly targeting a reduction in personal taxes. Of course, perhaps this is only pre-election jawboning. Thank you for watching this week's Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pirl, www.s2pmarketsignal.com. For Pirls Stock Market Commentary, I'm Cynthia Pirl, hoping that you are enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive and no doubt exciting week coming up, and wishing you true success.